Hello everyone, Marty Mazur here. Good morning, June 4th, 2019, Tuesday morning, about a half hour before the market open. My 1 year bar chart for the S&P 500 daily chart in front of you looks familiar to you, I'm sure. Wanted to spend just a few minutes today looking at the chart, talking about the news and so forth. As I sit here right now, the Dow is looking at about a 225 point jump at the open. News that the tariffs on Mexico may not happen. The Mexican spokesman for the delegation who's in Washington sounded a very optimistic tune this morning. China overnight mentioned that they'd sure like to cure this problem here, the trade war, with dialogue, although they're continuing to forward measures of retaliation and things that should have us cautious there. But those two news items really served to spark a nice bounce in futures trading early this morning and overnight. The chart here, however, is not looking real encouraging. You have your 200-day moving average right here has been breached by the price, and it looks like it's rolling over here just a bit. You can see it's beginning to slow down. No panic there. I mean, this isn't unusual even during bull markets. You can see we had that look back up in here and up in here. The key difference to me, and I've been alluding to this on the written blog, is that the whole time this was going on, I was pretty definite in my assessment that this was volatility to ignore. Conditions were holding up fine. I said that when this wind abates, we're going to get a strong snapback rally. And of course, we've gotten that. I can tell you that same story here. Conditions are still expansionary. The problem is our proprietary macro index, which we put a lot of faith in, was twice as good down here, believe it or not, in terms of macro or general conditions versus where it's scoring currently. And the deterioration, frankly, in our view, is all in the industrial sector, and it's all about the trade war. Now, there was deterioration here. There was a lot of deterioration while the market was rising up in here, but still pretty strong relative numbers on a historical basis. Nothing that says, hey, recession risk is really growing. I will tell you now, recession risk is really growing. We're not there, but we're to the point where I need to start sounding a cautionary tone and start talking about the fact that we are internally looking for various ways to play defense in portfolios if indeed things do roll over. We're not there yet, but we're getting too close for comfort. Now, the fact that we're not there yet means that if, for example, no Mexico tariffs, you're going to get a nice bounce and you're going to get some short covering exacerbating that bounce. If suddenly talks are scheduled in Beijing or in Washington on the China situation, obviously, and the president even hints that he's going to abandon the moniker tariff man, we're going to see a stronger bounce and pushing towards all-time highs. Whether or not that's sustainable depends upon literally rolling back all of the new tariffs that have been added on to China over the last year or so. And I promise just not to go there going forward. If we can get past this ideology, I think we're still in very good shape and we've got a ways to run. If we don't, unfortunately, the next recession is going to come before its time. At a lower interest rate regime and a still bulging Fed balance sheet. And those are conversations we'll have later. So let's hope we don't get there, but we'll deal with it if we do. In terms of how the chart looks, again, this isn't a great look up in here. Again, the technical damage is there. Here's our on-balance volume, which had worked for us really, really well back up in here and in here as an indicator. So that's not, it's definitely not telling us we have any bullish divergences. The moving average convergence divergence looks anything but encouraging in terms of momentum. And then the one indicator that I had that had a nice bullish divergence up in here when I was talking about a potential rally up in here, that's rolled over. And that's bearish now as well. This morning, though, we're definitely getting something different in the price action. It's all based on rhetoric to this point. If some of that rhetoric becomes reality, we're going to get a nice bounce. We're going to get some short covering. Although I should point out that any technician right now would simply say, look, we had this breach of 2,800. Normally, you get a test of that level. Look for that over the next couple of days. So I think if we can get some momentum to 2,800, you're going to see some resistance as we reach there. There's some sellers waiting to take advantage of this bounce if indeed it does get there. Whether or not we push beyond it may need more positive news and have to come from the US side before we get these shorts to cover and get some momentum to the upside. So it would make sense to me that we can test the 2800 without any new concrete news. Then you come right back down here through these levels. Next thing you know, we're testing 2700. Just in closing, let me update you on the retracements that I've shown you lately. You may recall I talked about these Fibonacci retracements and these important levels, 38.2, 50, and 61.8. Notice yesterday came right almost to that 38.2 retracement level, which tends to be support, and bounced right off of that. This morning, again, we're bouncing higher. So again, in the absence of anything concrete or in the confirmation that there will be tariffs on Mexico, look for this little rally to fizzle out and then test this level back down here again. Then you move down and test this 2700 level, and then probably beyond that 2650, which would be that 50% retracement. So we are anything but out of the woods, but certainly a relief rally, oversold bounce right here is called for. It looks like it'll be noticeable this morning. Question will be, will traders sell into it as we get up in here? They will if we don't get any confirmation that good things are going to happen with the Mexico news, and then, of course, the China situation. So I'll keep you posted. Going to be an interesting morning, going to be an interesting week. Thank you, as always, for watching and listening, and I'll talk to you again very soon. Bye-bye.